Results out from Dimension Data this morning show an 11% rise in revenue to $2.2 billion for the 6 months to March. That was in dollar terms. Net profit rose 4.6% to $75 million, while basic earnings a share rose almost 8% to 4.2 cents. Joining me from London for more on the group's performance and prospects is CEO Brett Dawson. Brett, good afternoon.
Good afternoon. Good to be with you.
Thanks, Brett. Well, Brett, this looks like a continuation of what we saw last year when your geographical and business diversification really helped shield you from the worst of the downturn. And again, it's the services business that has continued to shine in the first half of this year, isn't it?
Yes, it is. The services, we drove about 10% growth in managed services, and that drove our entire business and resulted in the good numbers we were able to put on the table.
Well, perhaps one of the drawbacks of being so geographically diversified is currency fluctuations. And of course, we had revenue for the period down 3.7% in constant currency terms. And this was really due to a fall in revenue at Plessy and also lower revenues at Express Data. But it did come off a high base, didn't it, from the first half of last year?
Well, correct. We had a very strong first quarter of last year before the global financial crisis hit. So when we look at our business performance, we really do see, if you're looking through the half numbers, in the second quarter, tremendous acceleration year on year and a strong recovery as we go into the third quarter this year. So we have seen now, the last 3 quarters, an acceleration from the low point in the middle of last year.
Well, Brett, services now make up about 44% of group revenue, up from 42%. Do you expect that to continue growing, or do you think we get to start to see a return for product demand in the second half of the year?
Yes, we do expect to see products starting to come back. We see that in our order rates now and improving product volumes. So we're at the same time looking for growth in services. So right now, in terms of the second half, probably won't see an improvement in the services mix, but growth on both sides of the equation will be really good news for us.
Of course, you would like Data to be more of a services-led business. So where would you like to see this balance eventually falling?
We haven't given specific guidance on that, but clearly we've moved that ratio steadily up over the last couple of years. We're now in the mid-low 40s, and we'd certainly like to get that over 50% if we could.
Brett, you said you are seeing demand coming back for products. What sorts of products, what are companies going to be spending on as they start to rebuild their networks and things going forward?
Well, there's some pent-up demand in just the core networking, so that is the data related communications infrastructure. There's a definite pent-up demand there from folks holding back about a year ago. And then on top of that, we've seen very fast acceleration in video technologies. That's up for us 57% year on year. Very exciting growth there, and very exciting growth in the data center, where we can take to clients the opportunity to reduce their number of servers, the number of data centers. So we're consolidating, using technology to consolidate your footprint into fewer data centers, and within the data centers, less technology. So that's having a dramatic impact in terms of the cost reduction for our clients, as well as improved use of it. At the same time, we're also seeing the third key element is growth in security technologies. It's still very big for us. And Microsoft's new launch of their Windows 7 and the integration of data, voice, video through to the Microsoft suite, we think is going to be a killer application for us in the next couple of years.
How are you positioning yourself?
There's lots of areas of growth.
How are you positioning yourself for these areas of growth? And would you make small acquisitions perhaps to better position yourself for those? Because of course you did have gross cash balances of almost $500 million at the end of the period.
Well, from time to time we made a strategic acquisition in the Microsoft technologies about a year or 2 back. And we continue to do that to fill out our skills from place to place. But the biggest part of our strategy will be to just drive organic growth. It's about the tough yards of hiring the folks, bringing them into the family, and letting them going out and build our business. And we think that works best for us.
Brett, just perhaps look at the business geographically. You do point out in the commentary that the United States has shown a good recovery in the Americas side of the business. What's Europe looking like though? Because the economic recovery in Europe seems to be lagging that of the United States. And with events of the past month or so in Southern Europe, it does look a bit more cautious there.
Yes, I think the Europe's definitely lagging. You've had powerful recoveries in the United States and in Asia. Europe very mixed. And frankly, we still, obviously, the outlook quite cloudy for Europe, especially with the current Greece crisis and the contagion risks there. So we are cautious about growth within Europe right now, but we're certainly seeing our business being very solid at the same time.
Asia, how's Asia looking for you?
Asia, we've seen an acceleration through the second quarter in both product and services, good growth in India, in China, in Malaysia. So we're quite optimistic that we'll continue to accelerate through the second half of the year in Asia.
Perhaps just looking at some of the individual business units, Internet Solutions also been performing well. There are pricing pressures coming through here though. What opportunities do you see for Internet Solutions so you can get rid of those pricing pressures, perhaps in the business data services area?
With Internet Solutions, we're very optimistic about the future of that business in South Africa and Africa more generally. Still continue to expand our voice services, still more in the data, hosting the data center. So we're quite very optimistic that the growth opportunity for us as somewhat of a smaller player in telecommunications in South Africa specifically is still quite exciting. As that market deregulates, we want to be an active player in providing your communication services to corporate South Africa. So we'll continue to invest heavily in Internet Solutions. On the one hand, expanding for growth opportunity. So we'll put another $30 million in terms of investment into data centers in the next 6 months. And we'll also be investing to reduce our input costs and enable us to continue to reduce the very high cost of communications within South Africa and pass some of that benefit onto our clients.
Okay, one unit that may have let the slide down is Plessy. Some analysts have suggested that there should be more of a focus on this division's managed services and outsourcing capabilities, particularly going into Africa, where they're trying to optimize their existing infrastructure. How would you respond to that? Is this something you're looking at?
Well, for us, we're moving to continue offering deeper and more value-added services to our clients is critical. It's part of the key tenet of our strategy. So we'll continue to move down the IT outsourcing route, not only in South Africa, but across the world. We've had some terrific wins in places, not only in South Africa, places like Australia and Asia. So our essential corporate journey will be to continue to provide a deeper, more meaningful managed service offering to our clients. And within Africa, we'll see that similar journey panning out for us in the fullness of time.
Well, Brett, just looking forward to the second half, you have talked about more product demand coming from companies. How do you see IT spend in general increasing or improving in the second half? Obviously, with equipment reaching its replacement, the end of its replacement cycle, what would you forecast for the full year for Data?
Well, for the full year, we're expecting to deliver a constant currency growth for the full year. So we've had, as you mentioned, a slight decline up to the first half of the year in constant currency, about 11% growth in US dollars. And we expect that growth, we expect more growth to come through in the second half of this year, as we've seen our order rates, our pipelines starting to expand and spend starting to come back in the IT technology and services place, specifically in places like North America and Asia. The momentum definitely positive there, so we're happy to guide the market to growth for the second half of this year.